To be honest, I have never been this pained all my life like what happened to me a few weeks ago. So a few weeks ago, I walked into the store. I wanted to get a few gadgets. And just like the way a typical Nigerian store would be, that the prices are tagged on the product you want to purchase. So you can literally tell how much you're supposed to pay for whatever you're buying. So that was exactly the same thing that happened. I walked into the store, the prices are tagged, the prices were fixed. So in my head, I was calculating, okay, this is the amount of money I'm expected to pay for any of these things when I get them. So I picked what I wanted and I walked to the cashier to make payment. So the cashier calculated everything and gave me the invoice. Then it became obvious to me that I'm not just paying for what I purchased, but I'll be paying for something else. And the price is not even small, like it was way big. I mean, a lot of thousands of naira. And I mean, I'm a tax lawyer and I already know about this particular tax. I already know about it, but it pained me so much because I was not the one at the receiving end. I was not the one who was supposed to pay. And that was when I felt the pain of every single Nigerian consumer. So that's basically what inspired this video. Today, I want to walk us through this particular tax that you pay when you purchase goods or services in Nigeria, and why every single Nigerian consumer should be concerned about this tax. So this tax is known as the value-added tax. People call it VAT, people call it VAT. So stick around, let's dive in. So I'm going to be answering a lot of questions that Nigerian consumers usually ask regarding this value-added tax. First question every Nigerian consumer would ask is, what exactly is value-added tax? So the value-added tax is a consumption tax and is paid by a final consumer. And when I mean final consumer, I mean that person who buys the goods or the services and is not contributing anything at all to the chain of production. And when we go further in this video, you understand why I decided to define it as a final consumer, and that person has to be a person who did not contribute anything at all to the chain of production. So the second question would be, what exactly is the rate at which this value-added tax is charged in Nigeria? Section 147 of Nigeria Tax Act 2025 sets the rate at 7.5% of the value of the goods you bought or the services, the cost of the services that you enjoyed. Because we've said it's a final consumer that pays. So we'll be looking at 7.5% of the worth of your goods or the worth of the service that you are enjoying. I remember during that period, during the whole time of the tax law reforms, where they wanted to increase the rate of value-added tax to 10%. In fact, the internet was on fire. Everyone was shouting, no, you cannot do this, you cannot do that. I mean, at the end of the day, we had the rate. The rate has always been 7.5, so we had that 7.5% rate retained under the new tax laws. The third question Nigerian consumers would ask is, who exactly pays this value-added tax? The value-added tax is paid by the final consumer, but it doesn't pay directly to the government, because I've said that this value-added tax is set by the federal government and paid to the federal government. So this final consumer does not exactly carry the money and get to the federal government and say, oh, federal government, take the value-added tax. No. It's structured in such a way that the final consumer pays to the supplier of the goods or services, which most times would be a company, a business, and then this business collects the value-added tax from different consumers and remit same to the government. So the role of the business, the role of the companies in this case, is called remittance rule. So they just collect from different consumers and remit to the federal government, whereas the person who pays the actual tax is the consumer. The next question is, does this VAT apply to every goods and services in Nigeria? And the simple answer is no. Value-added tax does not apply to every goods and services in Nigeria, because the law has stated that some goods are VAT exempt, which means you're not supposed to pay VAT when you purchase these goods or these services, and some other ones are zero rated, which means that when you buy goods that are zero rated, you pay VAT at 0%, which is technically that you're not even paying VAT. It's very important to understand, because most people who don't even know can walk into a store and buy things that the law has stated that those things are either VAT exempt or zero rated, and you still see the supplier putting VAT in your invoice. And if you don't understand, that the law has already given you this goods and services as VAT exempt or zero rated, you might end up just paying VAT on them when you are ordinarily not supposed to pay. I mean, the list of goods that are either zero rated or VAT exempt, they are really so long in the act, and maybe I would have to put some of them, maybe list of them, in the description of this video so you can look at them and see which ones apply to you, which ones you would like basically get in your everyday life, so you know what exactly the law has said. But I'll take time to read out a few of them from the act. So you can see the Nigeria Tax Act. Let me start off with the zero rated goods. Nigeria Tax Act section 186 basically listed those things that are zero rated. It started by saying basic food items. We had all medical and pharmaceutical products, including even herbal medicine. We have fertilizer for agricultural purposes. We have educational books and educational materials. We have locally produced animal feed. We have agricultural seed and seedlings. We have electricity generated by electricity generating companies like those GenCos. We have, the list is really long. We have exported goods and services. We have medical services. The list is really long, but maybe we'll take a moment to explain some of them so we even understand what exactly the law is saying. So when the law said something like basic food items, it's very long, very long. So basic food items like white bread, brown bread, table honey, locally produced table honey, cereal like rice, wheat, millet, oats, I mean cooking oil, your vegetable oil, your soya oil, fish of all kind, whether it's fresh, it's frozen, fruits, like normal fruits, even those ones you buy in the stores, like those kind of fruits, pineapple, orange, mango, grape. They said, the law said whether it's fresh or dry, right? You have tubers like yam, cocoyam, water yam, cassava. Like, it's really long. So when you buy any of these things, your educational material, like the materials you use in instruction for active learning, I mean, it's a whole lot. Like I said, I would pick out some of them from the law and put in the description of this video. But for you to understand that when you see these items in the store and you buy them, the law has already said you are not supposed to pay value-added tax on them. But you end up seeing some of these suppliers or some of these sellers include VAT in your invoice. And when you don't know, you end up paying because you don't even know that the law has said these are zero rated or these are VAT exempt. Right? So knowing and understanding each of these items that the law had placed as being zero rated or VAT exempt would ensure that, you end up not paying as much as you would have ordinarily paid if you don't have this knowledge. So check the description of this video to see the list of most of them. I mean, I won't be able to put all of them, but I'll put as much as possible that applies to Nigerians in their everyday lives. So the next question is it every business that's supposed to charge and collect VAT in Nigeria? And the answer is no. The law is clear that it's not all kind of businesses that has this obligation to charge and collect VAT. And if you look at Nigeria Tax Administration Act, Section 22, it stated it clearly that if you are a small business, if you are a small company, you don't have that obligation to charge VAT, collect VAT, or remit VAT. And you might be wondering what exactly is a small business. So you see if your own business would even qualify as one that should collect and remit value-added tax. So the law had defined a small business as a business that earns annual turnover. That's every single thing you earn in a year is either 100 million or below. So your annual turnover is 100 million or below, and your fixed asset, so the asset that the business owns, like the land, the building, fixed assets, not movable assets, your fixed assets is not more than 250 million. So your land, your building, and all of that the business owns is not more than 250 million in worth, right? And the company or the business is not a professional service provider. So if you are a professional service provider like the lawyers, the accountants, the auditors, engineers, you're already out of it. You really don't even qualify. So if you qualify as a small business based on the description we've given already. The law is already clear that you don't even need to worry yourself. You don't even need to bother about collecting or remitting VAT, because you should rest. You should put in effort to grow before we talk about you collecting and remitting value-added tax on behalf of the federal government or to the federal government. So the next point and next question that people would ask is, what if I collect and I decide to just siphon it, just put it in my pocket, and I do not remit to the government? You don't want to be that business that will collect without remitting, because the penalty for collecting and not remitting is way higher than you can even imagine. Because first, you'll be made to even pay the amount you collected without remitting. Secondly, you will pay penalty. You'll be made to pay penalty on that amount unremitted, which is 10% penalty per year, right, on that unremitted amount. And thirdly, you will also be made to pay interest at the prevailing CBN rate on that unremitted amount. So when you calculate all of this, you see that it's really higher than you would have just respected yourself and remitted the VAT you collected. So the bottom line is, when you collect as a business, you just have that obligation to remit. And the remittance is usually done on or before the 21st day of the following month. So let's say, for example, you're collecting for March. We are currently in March. So you have up until April, 21st day of April 2026 to have remitted the one for March. And if you collect for April, then you have up until 21st day of May to remit for April. So it just works like that. So the next point to consider is the input VAT and the output VAT. And what exactly do they mean? The input VAT is the VAT that businesses usually pay when they are getting raw materials to use in producing their final product. And the output VAT is the VAT that the business would charge on its customers when they're buying its product. So let's take, for example, you have a shoe manufacturing business, and of course you will need to buy raw materials. You buy leather, you buy maybe gum, you buy sole. You just buy everything you need to produce the shoes. When you're buying those raw materials, you pay VAT on them. And you pay VAT. Those VAT you are paying when you buy the leather, when you buy the gum, when you buy all the things you need to use in producing the shoes. It's known as the input VAT. Now you're done producing the shoe. You then have your leather shoe, you have your khaki shoe, you have different kind of shoes that you produced and you want to start selling. You will then start charging VAT on the goods that you are selling, on the finished product you are selling. And that one is known as the output VAT. The rate is the same, 7.5% across, right? Whether you are paying the VAT for your raw materials, which is the input VAT, or you are charging the VAT on the goods you are selling to your final consumers, it's still the same 7.5%. But at this point, you charge the VAT known as the output VAT and collect the VAT, because remember I said at the beginning that the business would charge the VAT, collect, and then remit. Now it becomes interesting because recall when we defined VAT as a consumption tax that is paid by the final consumer. So at this point that you as a business, you're not the final consumer, you bought raw materials and you use those raw materials to produce your own goods. When you sell the shoes, when you sell your final product to the final consumer, you collect your own output VAT. Now the law allows you to recover all the input VAT you had paid when you were buying raw materials from the output VAT. So basically, see the way it works. Let's just make it practical. Let's say you bought raw materials worth maybe any amount, but you paid input VAT on them that is worth, let's say, 100,000. Now, as the producer, you are not handicapped, because when you are selling the final product and you are charging the output VAT, let's say you've charged VAT and you collected maybe 200,000 as the output VAT. Basically, what the law is saying is that you should deduct your input VAT from the output VAT before remitting to the federal government. So that 100,000 you had paid when you're buying the raw materials, minus it from 200,000 you recovered as output VAT, and then you have only 100,000 to remit to the federal government. So it boils down to the fact that it is only who did not produce anything, it's only who did not contribute anything to the chain of production that pays the VAT and does not have any means of recovering. So guys, if you watched up to this point, I just want to encourage you to subscribe to our channel, because in this channel we'll release tax-related, finance-related videos that will guide you and help you to understand how taxes work in Nigeria, so you don't have to pay taxes when you're not supposed to pay, or overpay when you're supposed to pay lesser. So subscribe to the channel and click that notification bell so you don't miss out our future uploads. So in summary, we've talked about value-added tax and why you as a Nigerian consumer should be concerned about that. We also talked about the rate at which is charged, which is 7.5%. We've also talked about the input and output VAT. And most importantly, the most important part of this video is the fact that we've talked about the goods and services that are VAT exempt and ones that are zero rated. And I said before that I was going to put the list of them in the description of this video so you get to see them and know them. So when you're going to buy things in the store, buy things anywhere, you see any of these things and someone wants to charge you VAT on them, you tell them no. The law says I am not supposed to pay VAT on them. Don't also forget to like and comment on this video, and if you have any particular tax question you want us to answer, drop that in the comment section and I will attend to you as quickly as possible. I remain Ruth, your tax lawyer. Until I see you next time, bye.